how are the two financial crises similar and different? Let's start by discussing the similarities in the two crises. First of all, the mood of euphoria, based on the adamant belief that the value of land will not decrease, played an important role in the creation of bubble in both crises. This encouraged investment and use of leverage to purchase land, which built up a giant bubble in the economy. The second factor that contributed to the buildup is the greed of investors without adequate risk recognition and risk management strategies. In the case of the Japanese asset market bubble, investors purchased land and used the land as a collateral to obtain more loans for more land. Although this cycle is economically unstable, this risk was not recognized, and hence the value of land assets began to skyrocket to unreasonable levels. Similarly, during the credit crisis, mortgage brokers sold the risky mortgages without an adequate risk management strategy. In the case of borrower default, banks attempted to minimize risk by acquiring the housing, but this turned out to be disastrous as housing prices fell significantly below the original mortgage value. Lastly, both governments' aggressive monetary policies also contributed to the buildup of bubbles in both crises. In the case of the Japanese asset market, monetary easing was done to counter the impact of the Plaza Accord, while the federal interest rate was lowered to 1% to combat the long-lasting impact of the recession that occurred previously. Nonetheless, these quantitative easing policies contributed in encouraging investors to invest in the real estate market in both countries. Moving on to the differences between the two crises, we have identified two main factors: actions of each government and foreign involvement in the crisis. During the Japanese asset market bubble, the Japanese government recognized the possibility of the bubble and imposed the monetary policy of increasing the discount rate in an attempt to address the problem. On the other hand, the US government during the credit crisis only took action after the crisis occurred and the effects hit the economy. However, the question regarding whether the Japanese government's policy was highly effective remains unanswered, as there were major criticisms that the Bank of Japan's response was too late to stop the crash from occurring. Lastly, the degree of foreign involvement in the two crises varied. The Japanese economy struggled to recover from the bubble burst, as there was a general tendency to resolve the crisis domestically. In contrast, the financial crisis in the United States avoided the worst as countries running current account surpluses bought the shares of banks that desperately needed capital infusions. The Chinese government buying shares of Bear Stearns and Morgan Stanley exemplified the extensive foreign involvement demonstrated during the financial crisis. Considering the evident similarities in the factors that contributed to the buildup of both crises, an essential question arises: is it possible to prevent similar financial crises? We believe that similar financial crises can be and should be prevented by taking a holistic measure of considering both the causes and the consequences of the crisis. In order to prevent the causes, there are several behaviors by economic entities that they should be aware of. First off, the investors and banks should recognize and always keep in mind that the value of land assets will not keep increasing. Unwavering belief in this statement could lead to the development of the euphoric mood in the economy, which could serve as a strong driving factor behind the buildup of a bubble. Secondly, diversifying economic activities across the nation and ensuring rational allocation of resources remain crucial in preventing another similar crisis from occurring. Doing so may help minimize the risk when the concentrated industry collapses and potentially render the consequences of a potential financial crisis less severe and long-lasting, unlike how the Japanese asset market collapse led to a lost decade. Lastly, financial regulation should be strengthened to prevent risky investing behaviors, such as a subprime mortgage loan in the case of the credit crisis. Imposing strong financial regulations may have prevented the existence of imperfect information within the U.S. economy, while in the case of the Japanese asset market, regulations on risky behavior, such as using the purchased land as collateral to obtain more land, may have prevented the bubble from forming of its entirety. Last but not least, we would now like to discuss the methods to alleviate the aftermaths of the crisis, if it could not have been prevented as previously discussed. First of all, it seems that the initial response of the government regarding the crisis remains most critical, as Japan evaded a US-like financial crisis thanks to a large government surplus. While the delayed response of the US government in cutting down the interest rates led to a prolonged period of recovery, it took months of lobbying between the Wall Street and the Federal Bank to cut down interest rates after the financial crisis. Moreover, it is necessary to alleviate the fear of uncertainty in the general public by relaying accurate information of this economy. During the financial crisis, the collapse of the housing industry caused a mere $500 billion loss. However, the fear that the other debits would suffer similar fate led to a reverse multiplier effect that led to the onset of the financial crisis. Therefore, delivering thorough information of the economy to the public, minimizing the uncertainty, seems necessary for the collapse of an industry to not spread like wildfire. That will officially mark the end of our presentation. Thank you for listening.